What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, we will be talking about the S&P 500 index and the S&P 500 index ETF, and we will try to identify the pattern from a technical standpoint. I'll also share some of the macroeconomic data related to unemployment and cases. If you guys enjoyed this video, please make sure to drop a like because it really helps out with the channel and recommends this video to other people who might be interested in watching. Also subscribe and make sure to hit that notification bell so you don't miss out on any future market updates, videos related to investing and technical breakdowns. I will be putting out some stock analysis video. Neo stock analysis is definitely coming, and there's going to be a comparable analysis with Tesla, and there's going to be some more stock analysis videos coming up shortly. So today, the markets, well, there was a lot of mixed sentiment. When you guys can see, the S&P 500 was down close to about 56 basis points. The Dow Jones was down even more, close to 1.4%, and then the Nasdaq hitting an all-time high of up over 0.5%. So like I've already mentioned in one of my previous videos, between the three market indices, Nasdaq is the strongest one because it is very tech heavy. S&P 500 kind of falls in the middle of the three because it's not too overweight, not too underweight, it's kind of in the middle, and Dow Jones being one of the weakest ones between the three market indices, which is why it's down close to 1.4%, which only includes about 30 stocks, and they are constantly changing and shifting based on their market cap and also the price that they're trading at based on the industry and things like that. So for this video, we will also go over the unemployment rate. So today, for the initial claims, we filed about over 1.3 million people, which was still better than expected. And now in the last 16 weeks, total nearly 50 million people have filed for unemployment initial claims. Now the unemployment rate as it is still sits at 11.1% because again, that's a more of a lagging indicator, and we won't find out until the first Friday of August where that new number sits. But that being said, there's also a misclassification error that we should all be aware of, and the real or the accurate figure can deviate from the 11.1%. It can be a little bit more or less depending on how the Department of Labor reports that number. Now that being said, the cases, yesterday we hit over 60,000 cases for the first time since the outbreak, which again is really unfortunate. Majority of the cases coming from states like Texas, Florida. The death rate is what we need to really contain and make sure that we don't spike in terms of the death rate that we have, and we contain and or under capacity for hospitalization and healthcare services. So now we're going to jump over to the patterns, and I will also be analyzing the Nasdaq Index, which right now sits at 10,547. The futures market is open and trading. You can see the S&P just about 12 basis points on the green, and the Nasdaq futures are up just about 10 basis points as well. So if you guys have been following up with any of my market updates, you have a really good understanding on where those key levels are going to be. But today I was watching the S&P 500 index very closely towards the end, and I was just hoping for the pattern to close above 3155. And the reason I mentioned 3155 is because that has previously acted as a really strong bear camp. Every time we approached 3155, we essentially got rejected, pulled back, or gapped down, which is why I was hoping that the pattern would close above 3155. We were trading above that level up until 2:30, but then towards the end, you guys can see that we did pull back, and then towards the last hour, we did push up, and I will jump over to the 5-minute chart in just a second, but we did push up, but then closed at 3152. So this right here is where we closed, again, down about 0.5%. But that being said, if you were to look at the price action, on July 6th, we gapped up heavy and we pushed up all the way to 3180, which we had previously recognized as a very clear level of resistance, right, from my previous market update. And the reason we did that is because based on previous pattern, that has previously acted as a really strong support. You guys can see going back as far as June 10th, when the pattern essentially pulled back and then pushed up, essentially validating that support as a bounce. So now this support started acting as a new resistance, right? So this level is going to be our continued resistance that we need to eventually break out of 3180. So we got rejected here now 3 times, once going back on July 6th, again on July 7th, and then more recently on July 9th. So 3 times we have gotten rejected at 3180. More recently hitting 3179.78 and then pulling back all the way to lows of 3116. Then we pushed up, got rejected at 3155, which has previously acted as resistance. You guys can see right here. So now moving forward, The next key support is going to be sitting at the low of this candle, which is at 31.15. So that's a level that we need to watch very closely. And that also makes sense because that has previously acted as some type of resistance, some type of support, some type of resistance right here again, and a little bit of consolidation. So it makes sense why we are trading in between this range. Moving forward, I do see a little bit of a bearish momentum, and the only reason I say that is because we are getting rejected at our new resistance at 31.80. Now that doesn't mean that eventually we might not break out of those levels. It's just in the near term we can potentially see a minor pullback down to 31.15 to retest and revalidate that support. Now if you do that, that's going to be a drop of close to about another 1 to 1.1%. Essentially means that we are retesting this level before consolidating and then retesting 31.50 to break out of that level. Because the reason I say that is because this has previously acted as a really strong resistance, right? Multiple times. You guys can go back as far as the second week of June. On June 16th, we got rejected. Right here was an inverted hammer candle on June 19th, and then more recently on June 23rd, which is the reason why I'm thinking this can potentially act as a continued resistance before we see that buyer momentum come in with heavy volume and we break out of that level. So more near term, I again feel like the markets might pull back just a little bit. We did pull back close to 0.5%, so tomorrow we'll find out if we do pull back again down to 31.15 to retest and revalidate that support. Today we did bounce off of those levels, so that's good. That's a good support that we need to continue to maintain and hold. And if you do, that can present myself as a good buying opportunity to rebalance some of my portfolio and de-risk or take on a little bit more exposure with some of my positions. So now we're going to jump over to the 5-minute chart to understand the price action on a more closer level. So this right here is where the markets opened today. You guys can see that we did gap up a little bit, and I'm going to go ahead and remove this line just so you guys can see the inverted hammer candle that was formed right at 9:30, and we're looking at the 5-minute chart, right? So the first 5 minutes, we essentially did push up, retested 31.79, and then for the rest of the day, we just never hit that level, and then got sold off all the way to 31.15, and then made our way back to our more near-term resistance at 31.55 to 31.60. Now towards the end, again, I was really hoping that the market would close above this 31.55 to 31.60 level, but that just didn't happen. So now moving forward, I do see the market essentially trading in between this range. This area being the next resistance right here, which we need to watch. If you do break out, then our next resistance sits at 31.80, and then our more near-term support is sitting at 31.15, which is going to be this level right here, which has been validated today. So now we're going to jump over to the S&P 500 ETF, ticker symbol SPY, to understand where it was trading in terms of the dollar amount and where do I personally see the markets going in the near future for this ETF. So again, if you've been watching any of my previous market updates, you have a really good understanding that 310 was recognized as a really good support prior to the market even hitting that support and then bouncing off of that level. So we were able to identify 310 as a really good support. Then it pushed up, got rejected at 315, which again, we had recognized as a really good resistance. So moving forward, we just need to watch if it continues to trade in between this range. Right now, after hours, we're up just about 3 basis points, so pretty much flat on the day. You guys can see that we are trading pretty much flat and consolidating for a little bit. But moving forward, this 315 resistance holds. If you do break out, 318 going to be the next resistance that we need to break out. And then if you do pull back, we are looking at 313, which has acted as a really good support today. And then if you do pull back even further or break down of 313, then the next support we're going to hold is 310. That's going to be a drop of close to 1 to 1.1%. Again, if you guys did enjoy this video, please make sure to drop a like because it really helps out with the channel. Also subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing, and technical breakdowns. So now I'm going to quickly jump over to the Nasdaq Index and how the pattern has been performing. So if you go over to the daily chart, you guys can see that this right here is just picture perfect, right? Like if you got in on March 18th in any of the Nasdaq ETFs or levered ETFs or the stocks that are in the Nasdaq Index, congratulations to you because you absolutely killed it. Nasdaq is up over 56% from its lows in March and also is hitting record levels, and it's up over 22% on the year. So now that being said, from a technical standpoint, goes without saying that this thing is really overextended and overbought, and there is or there could be potentially a minor pullback. Now that being said, it doesn't have to happen. This thing can continue to rally as much as it wants, and if you go over to the 4-hour chart, you guys can see that every time we do see a minor pullback, people see that as a really good dip buying opportunity and bring this thing back to its all-time highs. Now, that being said, bonds are not paying anything. Obviously, cash in savings account is not worth anything either, which is why tech as a sector is probably the hottest sectors right now in the market, right? It just goes without saying. Amazon hitting all-time highs again, close to $3,200 a share. Tesla doing really well. Apple, Microsoft, PayPal, Square, all these companies essentially hitting 52-week highs and doing incredibly well. So that's why we're seeing such a paradigm shift in terms of what people are choosing to invest their money in. And the fact that there's so many eyes on the tech sector and the fact that so many people are actually buying these companies is what's resulting in this huge wave of demand and buying power that's driving prices even higher. So you're essentially paying, in my opinion, you're essentially paying a premium to play at this point, because none of the fundamentals or the economics matter for the Nasdaq, because everything, in my opinion, is a little bit far from reality. Even though I own, full disclosure, I own Amazon stock, I own Apple stock, I own Microsoft stock, but everything in my opinion seems a little bit too overvalued, which is why my personal strategy has been to manage my risk as we go along, right? So de-risk or rebalance portfolios as I see fit, as I see the markets being a little bit overvalued, so I can take some exposure off the table, because we are not too sure what is going to happen in the future, right? What's going to happen, where the markets are going to go, how this is going to play out, and if we're going to continue at this pace. So that being said, again, congratulations to everyone who's been on this huge rally that we have seen, and the markets just keep going up. I mean, if you go over to the 5-minute chart, there is no clear support or resistance that we need to kind of follow along with. It's just that it's making higher highs and higher lows, right? So if you were to just make some simpler trend lines on this chart, it's making higher highs, and at the same time it's also making like these higher lows. So that's my quick take on the Nasdaq. I hope you guys enjoyed this video, and if you did, please make sure to drop a like. It really helps out with the channel and recommends this video to other people who might be interested in watching. Also subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing, and technical breakdowns. As always, happy investing, and I will see you guys in the next video.